Hey everybody, it's Amber. Welcome back to the channel. So excited to be talking with our guest here today. I'm sure a lot of you have heard a lot of things about mortgages and what's happening in the mortgage industry right now. Very volatile time, so I brought in the expert so we can get a couple questions answered. And so with me today I have Jeff Janash from Townsquare Mortgage. And today we're going to be talking about some of these terms you've been hearing, something called a buy down. So, so we're going to kind of get into it, Jeff, because it's one of those things that I think for folks now that are actively looking to purchase a home, it's things that they're hearing, but what exactly it is, sometimes it's just really hard to decipher.
Right, and if I didn't do this for a living, I would have no clue either. I've heard these terms thrown around. So the buy down, yes, this is a hot topic right now. And so those of you that are looking kind of like just peeking in the market to see what's going on, and you need to call Amber and let her take care of you on the real estate side. But the housing prices are still going up right now, right? And we got high rates. Rates are high right now. Higher than we've seen in a long time, actually. But and there's a lot of anticipation for the rates to come down in the future. They're saying 2024 rates are going to start coming down. But like we know, if you wait to jump in the market, you're going to pay more for that house a year from now. And I hear 8% appreciation in the next 12 months, which means you're going to pay a lot more for that house. So what we do is for people that are like, hey, I just can't afford the payments right now. It doesn't matter. I'd like to buy it now, but I just can't afford it. So how do we get them in the market? And this buy down is a really, really good product. And the buy down comes in all different sizes. There's a 1.0 buy down, a 2.1 buy down, and a 3.2.1 buy down. So we'll get into that. Yeah, right. A lot of math going here. So, but we're going to keep it real simple. We're going to talk about the 2.1 buy down, which is the most popular. And so a buy down is this. This is not a traditional buy down where you buy down the interest for 30 years. This is a short-term temporary buy down. And so what happens is the seller will pay for this buy down. And again, this is negotiated in your property that you guys are offering sales price on your offer. So you negotiate and have them pay for this buy down. The seller has to pay for this buy down. It cannot be paid by the borrower. And so basically the way it works is assuming the rate, let's just say, is at 7.25%. The interest rate's at 7.25%. And if we did a 2.1 buy down, that means year one would actually be 2% below the market. So the first year your rate would be 5.25%. Much more manageable, right? Because if everybody thought it was 5.25, there'd be a lot more people in the market. So year two is going to be 6.25. So year one is 2% below. And then year two is 1% below. And then year three, it's back up to 7.25%. Now, what everybody's anticipating is that rates are going to come down and everybody's going to refinance. So the question is, if I negotiate the seller to pay this, and let's say I want to refinance after only a year, which hopefully that's where we are, then will I lose that money? And the answer is no, because basically we set aside an escrow account of this money, and whatever you don't use, we apply towards your principal on the refinance. So that means if there's still interest left over that the seller is paying for you on that 2.1 buy down, they can use that money to help pay down your balance when we refinance the loan later into a lower rate. So I know that's a lot. So the biggest thing to understand is, as a buyer, I'm not paying it directly. It's more indirect in a sense that I'm negotiating with the seller to pay part of my closing cost. And this would be a closing cost, this cost of this fee. And then it's going to buy down my interest rate quite a bit, 2.1 buy down. And then if you did a 3.1 buy down, it can actually be 3% below the market.
So you can get it as low as
3% below the market. Now the cost goes up each time because everybody says, well, am I winning or am I losing by doing this? You're not winning or losing, because the amount of interest that you're saving is what it actually costs. So there's no win or lose. But in this market, it's a win because if I can go afford to buy a house now, then I'm going to be way ahead. Because if, let's just say, a $500,000 house, and let's say it appreciates at 8%, right? So that's what, $40,000 more sales price versus refinancing that cost me like $4,500. I refinance a couple years from now. So
that's significant. And I think the other thing about that is, for folks that do understand this and can recognize that you can actually get into a home now with a little bit lower payment, because that's what everybody's really concerned about right now. It's like, oh, I want to wait till the interest rates come down, and then when they come down, then I'll buy.
We're going to have a line out the door to buy these houses. Let me just tell you, the pot is boiling.
Oh my gosh, there's so much pent up demand, y'all, that like that's what you want to, what we're encouraging you to do is try to avoid that, because even though like you can get, you may be in a position where maybe the interest rates do come down, but you're going to be competing with other buyers, and now you're still bidding up the price. So what did you really win from waiting? And so I think what's really important, and why I wanted to talk to Jeff today, was to kind of educate folks on how this works in practice, so that you're not just waiting, because there's a lot of people that, oh, I'm waiting for the interest rates to come down. At what point are you a buyer? Is it 6.5%? Is it 5%? Like, do you even know your number? And so it's important to really understand the numbers, so that for your specific situation, not for your friends and family, what you're hearing or what you're hearing on YouTube channels or the news and things like that, when are you a buyer? And so that's why it's really important to educate yourself about what makes sense for you and your family as you're thinking about going into the market. But I will say, I suspect that it's going to be all heck's going to break loose once those interest rates come down, right?
I think you're going to, there was a stat I heard, for every 1% the market rates drop, you're going to have 5 million people jump in the market. Now that's nationwide, right? But that is a ton of people, y'all, and that may not be back to where we were in 2021 craziness, but a lot more than we've seen throughout most of the history in the housing market. So if you wait, it's just going to cost you. And everybody says, well, what's the right time to buy a house? Well, the right time to buy a house, if you go back and you look at the history of the market, of your sales price, of properties, it goes up like a 45-degree angle from, it goes back to like 1950 to now. It's like a 45-degree angle. And yes, in 2008 it did a little dip, and then right after the 2021 we had a little dip, but it was tiny. It was tiny this time. 2008 was a little bigger. But they are just little bitty short periods of time that the housing prices drop, and then they go back up. And then not only do they go back to where they were, they go even higher. So the thing is, you wait, it costs you money. I understand if you can't afford to buy, or you think you can't afford to buy, but you need to talk to a mortgage specialist to find out, where are you? Can you afford it? Maybe there's some down payment assistance programs that we can get you into. A lot of different things out there that can help you get into a house. So.
Yeah, and what you said is so important, because I have a personal story. Is my sister, this is back in I think it was 2021.
Okay.
I had told her, I said, listen, you should really find out, talk to a lender, figure out what your numbers look like, so that way you can decide when's the right time to buy. And she's like, well, we don't have the down payment right now, so I'm not going to bother. And I'm going, it doesn't cost you anything to talk to a lender to find out your specific numbers. This is not talking to an attorney where you're paying $150 an hour. This is not the case.
I wished.
I was like, maybe I should start charging. No, but it's completely free to understand what it is for you. And so I had told her that. She ignored me. Whatever. I'm just a realtor. How I know. And so a year later, she comes back and she's like, oh, I didn't realize that I can use some of my 401k.
I would have brought that up. I would have said, hey, buy it, don't.
It was a year. So the house, she's in a lovely home now, but like that same house, when I told her, that house was closer to like low 490, something like that. When it was all said and done, that house was at 6 by the time she bought.
Yes.
And I'm just like, it's my sister, so I'm not going to say I told you so, but I still want to.
Oh yeah. Well, we you know what? In our industry, it's so easy. Everybody says, oh, y'all are selling houses. Of course, you got to say it's a great time to buy a house. And it seems like that is the case, but it's not. It's just facts. It's just go look. If you do a little research, I know whenever rates go up, you're just like, oh, we'll just wait for rates to come back down to 3.5%. Y'all, that was pandemic rates. Y'all, we have only seen those types of rates a few times ever. And we probably will not see those anytime soon, because we've got inflation that keeps pushing everything up now, which is why the rates have stayed high. So right now is a time to take advantage. And I think if you really you jump in the market now, a year from now you're going to be thanking us. If you don't, you better be buying with us. But if you don't, you're going to still hopefully reach out to us and thank us for having you go do that, because you will save a lot of money.
And here's the other thing about that is when we talk about markets, they are very regional, right? And we're here in the North Dallas area. And like they're not seeing price decreases, and maybe in some parts of the country that is the case. Maybe they're starting to soften a little bit. Not here. And so you may not be competing against as many buyers, which is why I think it is still a wonderful time to buy. You're not going to be competing against as many people. And if you're doing new construction, a lot of the builders are providing incentives. Telling you right now, when these interest rates start dipping back down, you can kiss all of those incentives goodbye.
Will go away.
Oh yeah.
And the sellers aren't going to pay the 2-1 buy downs and things like that, because they don't have to, because it'll be a huge seller's market again. And like you said, DFW is unique to the whole United States. We're literally the fastest growing area metropolitan in the nation. There's projections that we're going to be number 3 behind New York and LA by, I think it's 2030. And then also right behind that, which again, I'm not going to be around, but year 2100, they're talking about we will be the largest metropolitan area in the United States, in front of New York and in LA. That's coming. That's because how many people are moving here and how quickly.
And that's just speaks to like the quality of life that's here. I know for me, originally from Southern California, moving here, I've been here for 4 years now, but just a very different pace of life and a very different experience in terms of just overall life quality.
Right.
And so a lot of people are seeing that. And so that's why they're coming. So when you think about if you're relocating to this area, maybe you're coming from a softer market and you're like, well, I'm seeing prices go down, so let me just wait and see if there's more where that came from. I get the logic, but for this region, it just doesn't track. It doesn't track with how, because you need to follow the migration pattern. And because more people are migrating from Southern California, from New York, from Illinois, from all the coastal cities where you can get more bang for your buck, so to speak, you're competing against those folks. So
go look online. Just do Google it. Find out where's the fastest growing area, and you're going to find they're always going to be. It doesn't make it stay that way every single month, but we're top 2 or 3 like every single month. So that just tells you the trend is coming here. So if you wait, you're going to pay. If you're paying attention to the national news, you're going to miss out on opportunities that are here locally.
Yeah, absolutely. So Jeff, back to the buy down. So are there any potential risk for borrowers if they go with this option?
There's really no risk at all because the seller's paying it. Again, you're negotiating that in, so it is costing you a little bit extra. If you could probably get your sales price lower, but you're having the seller pay it. It allows you to afford more house, right? By having the sales price a little higher and having the rate lower, you come out ahead on your payments. And that's what you're going to feel. So there's really no risk there. If you're only in it for 1 year and we refinance you, which is a lot of anticipation for that, then you still don't lose because they're going to put it, whatever's left is going to be applied towards your principal. So you do not lose. There's no way to lose in this.
Yeah. And then I know you explained the interest rate, how it adjusts in the first period. So is there any concern if the interest rates continue to go up for some crazy reason?
Right. No, there's no. What happens is you're basically going at what the rates are right now. So you're going to lock in at what the interest rates right now. Let's say it was 7.25, like we use as an example. But the maximum it goes to is that rate, 7.25. So it caps out at that, and that's it for the next however many years. If you did a 1.0, which is like 1% below, so the first year would be 6.25. The second year would be 7.25. For the next 29 years, it's going to be 7.25%. Hopefully we're refinancing you out of that before then. But
right. And then can you talk a little bit about qualifications for this type of loan?
Yeah, so the qualifications are this. You can do it on any kind of FHA, VA, or conventional USDA. You can use it on that as well. You can use it on any traditional program, except you can't do it on jumbo. Jumbo loans, you can't do it, and which means that your maximum loan amount to do this is $726,200. So anything below that, you can do the 2-1 buy down on, for your loan.
And then if you can talk a little bit about, so somebody goes into this and maybe they decide before they get into another year if they're going to sell the house.
Okay.
Any special considerations that they need to?
Nothing at all. I mean, this program is very simple. Like if you sell the house, again, they just apply it towards the principal, whatever you have left. It's just an escrow. The seller's basically prepaying your interest for the next 1, 2, or 3 years, depending on which one you choose. And it's held in escrow, and every month you use it, it gets smaller and smaller and smaller until if you have a little bit left, it just applies towards the principal. So you never lose the money.
Got it. And then are you, from what you're seeing for folks that are going into these loans, are there, is there any, case studies or any folks that you could think of that you're like, you know what, this was a really good opportunity for these particular clients and they're now in their home?
Yeah, I mean, I've had clients, multiple clients that they go and they're like, hey, I'm looking at a property and we want to be around 300 or 350 or whatever that range was they were looking at, and they see the mortgage payment and they have sticker shock on the mortgage payment, and they're just basically set back a little bit and they're just like, wait a minute, I can't afford to move into that property. So what ends up happening is once we show them the 2-1 buy down and they see how much less the payments are, they can afford to step into this property knowing that, hey, I know rates are going to go up a little bit next year, but they can start preparing themselves for it. So they could not even afford to get in. So I've had that on multiple cases where I can't get in the market. And that's a scary thought, because if you can't afford to get in the market and that's where you want to be, when you rents are going to continue to go up because they go up with the market. So.
Yeah, because when the housing market starts to tighten, you start to see the rental market start to get even higher. So now that's money you cannot recoup. You're not earning any course in that, and it's also not a fixed cost, right? And so that's the other thing that I think the beautiful thing about this buy down option is the fact that, right now, if you're just on the fence and you're like, okay, well, I'm just going to wait for things to soften. You've got several unknowns happening right now, right? So the prices, we don't know where they're going to land. There's some people that are like, oh, they're going to drop, and they're going to. We're not seeing. Here's the deal. If you are thinking that, if that doesn't happen and the prices keep going up, where does that leave you? right?
That leaves you paying more for that house.
For that same house that you could have bought by listening to somebody that doesn't maybe know the local market, right? And so by doing this, you you're at least you're locking in one thing. The price of the house is now fixed.
That's it.
You don't have to worry about it anymore. You're like, what is the term? I'm going to get this wrong, but it's marry the house, date the mortgage. Is that
right? Date the rate.
Date the rate. Date the rate. Date the rate. Yes.
Yeah. Marry the house, date the interest rate, right?
Yes.
And that's it. So because basically what's going to happen is if history tells us the rates are going to come back down, because a good solid economy, the rates are usually around 5.5%. And there's a lot of them behind that are saying the economy is actually good, but it's actually too good right now, right? So they're raising rates to like slow things down. So if we slow things down from too good to good, then rates are going to come down to that 5.5% mark, which is going to be not back to where we were back in the pandemic rates, but again, we probably won't see those ever again. But again, it will get people in there where they're a little bit more comfortable on those rates. But again, everybody's going to be having that same thought, and they're going to be like, oh, okay, it's time, and everybody's going to jump in together. There's all kinds of stories on that, in anticipation of what's going to happen. So.
And the other thing too, I think on that is that the longer the rates stay at the 7.5%, people start to adjust to them. They get used to them, and so when you start seeing a 6, you're like, oh, that's a great rate, or 6.5, or 6. Whereas before, because we got so used to like 2s and 3s, like ridiculous, right?
I knew it was going to happen. I was like seeing it coming. I'm like, they have got to start raising rates. I mean, I'm in the industry, and I don't, it slows my business down, but I could just see the future. But what happened was, as soon as they jump rates up, everybody panics, and then the faucet turns off, right? And then just nobody buys real estate. It goes dark there for a while. And so now people are like, okay, it is what it is. I see the house prices aren't coming down like I expected, and the rates aren't coming down like we'd hoped. So people eventually just have to get back in the market, if they're not in or need to move, or reason to have to do something. So
it's like you don't want to play possum with the housing market, because you're going to lose. Like if you just like what happens with the possum, it gets scared and it freezes, right? It doesn't do anything. And so like that might be good if your predator thinks that you're dead, but it also might be bad if the predator wants to eat you.
I'm stealing that one. That's a great analogy right there. You definitely don't want to play possum in this market, because just go look at the stats. The stats will tell you what's going to happen, and it's very predictable. And there's a lot of turmoil around the country, and there's certain areas that are falling down a little bit, but those are areas that traditionally do have really high highs and low lows. You'll see big drops and gains in those areas. Not in DFW. We've always been pretty solid, steady. We call it steady Eddie here. And now we even us during this boom, we had a little pop, which was unusual for this area, but it was unique to see that. But the whole market, everywhere in the United States did. But our market is staying steady. And if you go read everything you want to read, just read about DFW market, economy, or whatever, and you'll learn everything you need to know, and you'll see why.
Yeah, absolutely. Now, in addition to the buy down, are there any other loan products that you might recommend folks kind of start educating themselves on?
Well, I mean, if you need down payment assistance programs, we have those that'll help you get into the house. We have, you can do the traditional, but I don't like people doing that right now, because we are anticipating the refinance market. And if you do a traditional buy down where you buy down 1/4 or 0.5% for the life of the loan, you're going to probably lose money on that one, because it's usually about a 5-year break-even period. And really what we're seeing is within 2 years, we're probably going to be refinancing everybody out of their homes right now in these current rates. So there's not a lot of different options out there when it comes to that. It really is just where your comfort level is, and knowing that, hey, I need to get in the market, because if I don't, every day I sit on the sidelines, it's going to cost me money. That's bottom line. It costs you money to sit around and talk about it and think of, if you know you need to do it, and you're like, hey, I know we want to do it, but we're going to put it off, it just costs you money.
Yeah, I mean, I've been doing real estate a long time. So did real estate in Southern California, doing real estate here now in the North Dallas area, and I don't have any clients that were like, man, I wish I would have waited. Nobody.
Ever.
Nobody, ever. And I went through 2008.
I did too.
You know, I mean, like,
oh my God, yeah, guys, you don't even have, this is nothing compared to that, nothing.
No, nothing. So it's like, you have to ask yourself, do you want to sleep on it or sleep in it when it comes to a property? And so,
I'm stealing out. I'm stealing all kinds of
Cite me.
Yeah.
All right. Well, I guess we'll go ahead and wrap it up. But anything else you think would be important to share with folks on the buy down, or how to kind of think about this market right now when it comes to loans?
Yeah, I think right now you just need to understand that if you're feeling that I want to wait, it's a normal feeling. I think that is it. Like if I wasn't in this industry, I would probably be thinking the same thing. But hearing what we're saying here, we're not selling you. We're just giving you information and educating you. So go check our facts if you would like, and you'll see what we're talking about. But that 2-1 buy down, the 1-0 buy down, there's a 1-0 buy down in there. Pretty inexpensive to do. You know, it'll pull you down at least 1%, and at least you can feel a little bit more comfortable, and that'd be one that I would highly recommend as well. Because the sellers right now, they're kind of in that little area where, like, I want to sell properties a little faster. I want to sell my property a little faster, so I'm willing to pay a little bit more money to make that happen. So this is a good market to get into, to where you have some negotiations. Now, there are still pockets where you have multiple offers going, and there's not a lot of negotiating going. But either way, you need to get into the market if you're thinking about it, because if not, it's just going to cost you money.
Yeah, it's going to cost you money. And as of the time of this recording, we're about to get into, we're getting into the fall.
Right.
And this is an excellent time to buy, right? Like, this is an excellent time to buy, because most folks, they're starting to get into holiday mode. So they're like, oh, well, we'll wait until after the first of the year. And a lot of people are thinking that, such that there's also, like, if there's less competition now just because of the way the interest rates are, there's even less as we get towards the tail half of the year.
Right.
And so this is a great time. If you're somebody that's like, I want a deal, I want to get a good, I want to be able to negotiate. I love negotiating. And so this is our game time. You're wanting to negotiate, but whether it's a new build or a resale, anybody that's on the market right now, like in this fall, and as closer we get to the holidays, the more kind of room that we have to be able to kind of negotiate some terms that are going to be in your favor as a buyer. So definitely consider that as you're identify when's the best time for you to jump into the market. My hope is that this information that Jeff has shared, thank you so much.
Oh, glad to be here. Great info.
Has been helpful for you all. And again, we're here to answer your questions. So if you're like, well, you talked about this, can you talk a little bit more about it? Please reach out. Happy to help. Jeff and I work together, we're a team. And so know that we're here to support you. And whether it's now is the right time, there's no obligation here as well. Like,
give us a call. We'll talk. I mean, like, people are scared to talk to a lender because they think I'm going to pull their credit on them or something like that. We're not going to do that. But trust me, we're not in a hurry to pull your credit. It costs us money to do that. We don't want to do that unless you're ready. So, but we can talk. We can talk game plans. And you know what? It may be next year that you're going to do it because, hey, just work or whatever it is, but we can at least start talking game plans. We can talk credit, what we need to do, things that we can do, make sure we're ready to go. We just, what we will promise you is that we're not going to push you into buying a house, but what we do want to do is just make sure that you're educated so that you have the information that you need so that you can make the proper decision for you and your family. That's all we're here to do. And then if you did it, we hope that you enjoyed your experience with this so much that you refer your friends and family. That's the biggest payoff for us. So with that, I'm going to go ahead and wrap us up. So thank you so much for joining the session today. We'll be continuing to do these type of market updates just because the market is so dynamic. So it's important for you to know. So please look to this channel as a source of resource for you as you're thinking through how to make that next move for you and your family. If this video was helpful, please like. If you're not already a subscriber, please subscribe to the channel. There's more where this came from. So please go ahead and subscribe. And then if you want to reach out to Jeff or I, you'll have the contact information in the description of this video. So with that, have a wonderful rest of your day, and we'll see you in the next market update.